If trading were purely analytical, this little stick figure guy would already be rich. In fact, you would probably be rich. Engineers, math majors, spreadsheet lovers, all of them would be sipping coconut water on a beach by now. But they aren't. Most of them blow up just like everyone else. Why? Because trading is not an IQ contest. It's not a math puzzle. It's not even a problem-solving sport. Trading is a behavioral war. And today, we're going to peel back the psychological layers and expose exactly why even brilliant minds crumble the moment they hit the buy button. So sit tight. This isn't just a trading lesson. This is the origin story of the real villain in your trading career. You. You've probably heard it. Learn technical analysis. Learn fundamentals. Learn patterns. Learn indicators. Sure, that stuff helps. But here's the shocking truth that nobody wants to admit. Most traders don't lose because they don't know enough. They lose because they don't behave the way they know they should. Let me say that again. You already know what you should be doing. You can explain it to someone else flawlessly. You can teach it. You can post it on social media with glowing arrows and emojis. But the moment money is on the line, something inside you snaps. Logic leaves the room. Discipline leaves the room. Even your trading plan packs a suitcase and jumps out the window. Suddenly, you're left with fear, hope, greed, panic, doubt, hesitation, and something we like to call the "Oh God, please reverse" prayer stance. This is why we need to dive deep, really deep, into the psychology of what's happening behind the scenes when you trade. And we're going to start with this simple idea. Your brain was not designed to trade. Not even close. The illusion of being smart enough. Let's talk about smart people. The ones who enter trading thinking their intelligence will give them an edge. Engineers, coders, analysts, doctors, scientists. These folks walk into the markets like they're about to solve a puzzle that nobody else could. Ha! All these losing traders? Amateur hour. I have a PhD in numbers. 2 weeks later, they're revenge trading, moving stops, doubling position sizes, and whispering to themselves, "I know what I should have done. I just didn't do it." That line, "I know what I should have done," is the entire tragedy of trading in one sentence. It highlights the core problem. The issue isn't your ability to analyze. It's your ability to execute under emotional pressure. You're not battling the chart. You're battling your own human tendencies. You're battling millions of years of evolution that shaped your brain for survival, not financial speculation. You think logic will save you, but logic disappears the moment your money is at risk. Your brain sees a losing candle as a predator. A red bar equals threat. Your nervous system reacts. Your body goes into fight or flight. Your heart rate increases. Stress hormones flood your system. Your mind starts screaming, "Danger, do something." And suddenly, your hand closes the trade early, or moves the stop, or doubles down like a gambler on a losing night. Not because you want to, but because your survival instincts hijack your trading plan. Your brain is literally trying to save your life from a chart pattern. Welcome to the human condition. The moment before you click the button. Let's go inside your mind for a moment. It's the perfect setup. Everything aligns. Your analysis? A+. The market structure? Beautiful. Risk to reward? Glorious. You feel like the main character. Your finger hovers over the buy button. Then something happens. A slow, subtle whisper of doubt slithers into your brain. What if this time is different? Then a memory pops up. That trade last week that stopped you out. Then a thought. You really don't need another loss right now. Then another. Maybe wait for confirmation? Maybe 2 confirmations? Maybe 3? Maybe 12? Pause. Ladies and gentlemen, that moment, that tiny hesitation, is the birth of most losing trades. Because the second you hesitate, you're no longer executing your plan. You're negotiating with your emotions. The chart didn't change. Your strategy didn't change. Your rules didn't change, but you changed, and that's the problem. The other scenario. Let's imagine you do enter the trade. You click buy. Good job. But now you're inside the trade, and a whole new psychological circus begins. Every tick against you feels like a personal insult. Every pullback feels like betrayal. Every retracement whispers, "It's going to zero." You stare at the screen like your life depends on it. Your take profit suddenly looks too far. Your stop loss suddenly looks too close. And then the negotiation begins. Maybe I should move my TP a little closer. Maybe I should close early just to be safe. I mean, profit is profit, right? This is the moment where most traders self-sabotage. Not because the setup changed, but because their emotional state changed. You're no longer trading the chart. You're trading your feelings. The worst question of all. Let me ask you the painful question that separates analysts from traders. How many times have you nailed the analysis, predicted the move perfectly, posted it online, told your friends, felt like a prophet, but didn't make a single dollar off the trade? Because maybe you missed the entry. You hesitated. You exited early. You held too long. You waited for confirmation that never came. The market did exactly what you said it would, but you weren't on the boat. This is the divide between knowledge and execution, between being right and being profitable, between trading on paper and trading in real life. This is the psychological canyon most traders never cross. The story of Marcus, the analyst. Now, let me tell you a tragic, all too relatable tale. Meet Marcus, a stick figure trader who is basically a chart whisperer. This guy can spot market structure like an eagle spots prey, wave counts, liquidity pools, supply divided by demand zones. He sees it all. Other traders come to him for advice. He's right way more often than he's wrong. But when it comes to trading his own account, he bleeds money like a medieval battle scene. He thinks, maybe I'm cursed. Maybe the broker hates me. Maybe the market knows when I enter. Nope. The truth is painfully simple. When Marcus analyzes charts for others, he's objective, detached, clear. But when he trades with his own money on the line, everything changes. Fear kicks in. Hope kicks in. Self-doubt kicks in. Ego kicks in. His future, his bills, his goals, they all pile onto his shoulders. And suddenly, the logical analyst becomes an emotional mess. He cuts winners early. He holds losers too long. He takes trades that aren't part of his plan. He exits trades out of panic. He knows he shouldn't do any of this. He knows the right move. He knows the plan, but he still breaks it. Again, and again, and again. Because awareness alone doesn't fix behavior. Knowing isn't the hard part. Doing is, and Marcus is living proof. Why your brain betrays you. Let's go deeper. Your brain evolved for one thing. Survival. Not charts. Not probabilities. Not passions. Not discipline. Not risk-taking. Survival. Your ancestors who hesitated when a predator approached? Gone. Your ancestors who didn't respond to threats quickly enough? Gone. The ones who panicked fast, reacted instantly, and avoided danger? They survived. Which means your DNA is optimized for quick reactions, avoiding loss, emotional decision-making, action over analysis. Notice a pattern? These traits are great for staying alive in the jungle, but they're terrible for trading. Trading requires you to tolerate uncertainty, accept loss, stay calm, do nothing, let winners run, cut losers fast, follow a plan, ignore short-term pain. Your biology was not built for this. You're literally fighting your own nature. The physical pain of losing money. Here's something wild. Your brain processes financial loss in the same region that processes physical pain. That means a losing trade hurts your brain the same way as stubbing your toe or burning your hand. This is why traders revenge trade. A loss feels like an attack. Your brain wants to fight back. This is also why traders hold losers too long. Closing the trade equals admitting pain. Admitting you're wrong hurts your ego. Hurting your ego triggers self-defense patterns. And this is why traders exit winners too early. Their brain wants to remove the anxiety as soon as possible. Psychology is everywhere. It's in every candle, every decision, every hesitation, every moment you break your own rules. The danger of winning. Let's flip the script for a moment. Losses hurt, but wins? Wins can be just as dangerous. You take a few winning trades in a row. Suddenly, you feel invincible. You're in, I have unlocked the secrets of the universe mode. You start increasing position size. You stop following rules as tightly. You take trades you feel good about instead of trades your system approves. This is recency bias. The belief that recent outcomes predict future ones. And it turns traders into emotional gamblers. Many traders grind out profits slowly for weeks, then lose it all in two impulsive trades, triggered by overconfidence. Their strategy didn't fail. Their behavior did. Why you're disciplined in the morning and awful by afternoon. Ever notice something strange? You trade well in the morning, but by afternoon you're taking trades that your dog wouldn't approve of. What happened? Decision fatigue. Every decision you make, what to eat, what to wear, which messages to respond to, they all drain your mental battery. By afternoon, your discipline meter is empty. Your ability to make rational choices is weakened. Your brain defaults to shortcuts, impulses, emotions. This is why many professional traders only trade certain hours. Not because the chart is better, but because they are better. The brutal truth about sim trading. Here's a controversial but painfully true statement. Demo trading does not prepare you for live trading. Not psychologically. Not even close. When you trade fake money, your brain is relaxed. No threat, no stakes, no emotional activation, no fear, no greed, no ego. You aren't practicing the real skill. The real skill is handling emotional pressure. And you cannot simulate that. This is why many traders dominate demo, but fall apart once real money enters the arena. The cost of behavior. Let's wrap this part up with a painful truth. Most traders do not fail because they don't know enough. They fail because they can't control themselves. Because their emotions hijack their execution. Because their behavior betrays their analysis. The market doesn't grade you on how smart you are, how well you can analyze, how many indicators you know, how clean your chart looks. The market grades you on what you do, nothing else. Knowledge without discipline equals loss. Analysis without execution equals loss. Strategy without consistency equals loss. Plan without behavior equals loss. You can have a PhD in chart analysis, but if your discipline is a C, your account will reflect the C. And with that, we have laid the foundation. We left off with the most painful truth in trading. You don't lose because your strategy is bad. You lose because your behavior refuses to follow your strategy. So let's continue unraveling the final layers of the psychological battlefield, because this is where traders either grow or disappear from the markets entirely. And if you stay with me through this, you'll understand what most traders never figure out. The behavioral loop that destroys traders. Every trader alive falls into a predictable, self-sabotaging loop. You break your rules, you get punished. You promise to stop, you break the rules again. This loop isn't random. It's not poor luck. It's not because the market hates you. It's because your brain is designed for survival, not profitability. Your brain rewards what feels good now. Your system rewards what pays off later. And that conflict is the heart of your struggle. Your brain is comfortable with impulsiveness, émotionnelle décision, knee-jerk reactions, fixating on short-term outcomes, responding to fear immediately. But the market only rewards patience, repetition, boring consistency, Logic over emotion. Long-term edge. You're not just reprogramming habits. You're fighting biology. Losses. Why they break you so easily. Let's dig deeper into the emotional earthquake known as a loss. You might think a loss is just a red number, but psychologically, a loss is interpreted by your brain as physical pain. Your nervous system lights up. Your system floods with cortisol. Your fight-or-flight reflex fires instantly. This is why you move stops, double position size, jump into revenge trades, grab anything that looks like a setup. Try to fix the pain with action. You're not being reckless. You're trying to protect yourself from emotional pain. But do you know what's even more dangerous? Winning trades can ruin you too. A winning trade feels great until the anxiety kicks in. Yes, anxiety. Because once you're in profit, the brain fears one thing, losing what you already have. This triggers prématuré exit, shrinking targets, micromanaging candles, convincing yourself to take the safe win. You call it discipline, but often it's fear in disguise. Closing early feels safe, but it's a poison that destroys your edge over time. Your winners shrink, your losers grow, and mathematically, that kills profitability. Emotionally, though, it feels fine, and that is why it's so dangerous. The perfection strategy fantasy. Let's destroy a lie that keeps traders stuck forever. I just need the perfect strategy. No, you need a strategy you can execute consistently. There are traders making steady profits with the simplest systems imaginable. Moving averages, breakouts, basic S divided by R levels. Meanwhile, smart traders with sophisticated systems lose money because they can't stick to the plan. Complexity gives your emotions too many places to hide. This signal doesn't feel right. Maybe this time is different. I'll wait for one more indicator to confirm. Simplicity kills excuses. Simplicity exposes emotional inconsistencies. Simplicity forces discipline. In trading, simple isn't weak. Simple is weaponized clarity. You aren't the same trader all day. This might blow your mind, but it's true. You are not consistent throughout the day. Your mental energy drains. Your patience fades. Your discipline cracks. Your emotional resistance weakens. Morning you is calm and rational. Afternoon you is impatient and sloppy. After loss you is emotional and reactive. After win you is overconfident and reckless. This is decision fatigue, the silent account killer. And professionals know this, which is why they limit. When they trade, how long they trade, how many trades they take, how much risk they use. They're not managing setups. They're managing themselves. Trading without preparation is trading blind. Most traders approach the market like this. Wake up, open chart, find candle, click button, hope for victory. Zero preparation, zero clarity, zero intention. And they wonder why trading feels chaotic. Proper preparation is a psychological anchor. It removes uncertainty. It sets expectations. It stabilizes your emotions. It defines your risk ahead of time. It turns you from reactive to proactive. When you prepare, you are calm. When you wing it, you are chaotic. And chaos is the language of losing traders. The horror of trading with scared money. Let's talk about one of the most dangerous realities. Trading with money you can't afford to lose. If losing a trade affects your bills, your family, your security, your emotional brain will take total control. Logic becomes irrelevant. You exit early out of fear. You hold losers out of fear. You size too big out of desperation. You cannot be consistent with money that is essential for your life. Professional traders don't say, risk what you can afford to lose, because it's cliche. They say it because it's the foundation of psychological stability. If your size is too big to stay calm, your size is too big. Period. The gap between knowing and doing. And now, the final piece of this puzzle. The thing that defines traders, breaks traders, and eventually transforms traders. You can know the right action. and still fail to take it. This is the entire battle. People don't lose because of ignorance. They lose because of internal conflict, because emotions win the fight against logic in the heat of the moment. Knowing the plan is not the same as executing the plan. Execution is a skill, a trainable skill, a painful skill, a lifelong skill. The quiet, invisible damage of early exits. Let's highlight one behavior that quietly destroys traders more than any huge mistake ever will. Closing winners prematurely. It feels safe. It feels smart. It feels responsible, but it slowly kills your entire statistical edge. One early exit is harmless. 100 early exits is financial suicide. You shrink winners, you let losers run, and you distort the math so brutally that even a perfect strategy becomes unprofitable. The damage creeps in slowly, quietly, silently, until one day you look at your results and realize your system had a chance, but your behavior didn't. Discipline doesn't disappear, it decays. Discipline rarely collapses in a single moment. It erodes gradually. You widen one stop. You skip journaling one day. You take one impulsive trade. You increase size just a bit. You ignore one rule, just today. Each small crack weakens your foundation, and eventually, it collapses. Blow-ups aren't sudden. They're the final result of hundreds of tiny compromises. Traders fix analysis when they should fix themselves. Here's the shocking truth. When traders mess up, they almost always try to fix the wrong thing. They blame the strategy. They blame the indicator. They blame the time frame. They blame the market. They blame the volatility. And they immediately search for new tools. This is like putting a new engine in a car when the driver doesn't know how to steer. The problem is not analytical. It is behavioral. Until your behavior aligns with your system, no strategy, not even the best one on earth, will save you. The final truth of trading. And now, after peeling back every layer of psychology, after exposing the traps, the illusions, the pitfalls, the emotional storms, we arrive at the final truth. Trading is not about predicting markets. It's about mastering yourself. Your mind is the battlefield. Your emotions are the opponent. Your discipline is the weapon. Your consistency is the victory. You don't need to be perfect. You need to be stable. You need to be repeatable. You need to be committed to execution. Profitable traders aren't special. They've simply trained their behavior to act even when their emotions protest. That's the secret. That's the difference. That's the truth very few traders ever accept. And that brings us to the end of this journey. If you've made it this far, that already puts you ahead of most traders, because most never examine what's really holding them back. It isn't the strategy. It isn't the chart. It isn't the market. It's the untrained mind behind the mouse. The moment you take responsibility for the behavioral side of trading, your results begin to transform. So keep studying the charts, but study yourself twice as much. Because the market doesn't reward knowledge. It rewards discipline. Thank you for watching, and thank you for growing with me. If you got value from this, hit that like button, subscribe, and join me again right here on Timmy the Trader, where we don't just trade, we transform. See you in the next video.